North American markets moving higher today, recovering in the U.S., at least from some early week volatility. Gains led by companies in banking and AI. Let's go to Amanda Agati. She's Chief Investment Officer at PNC Asset Management Group to talk about what is ahead for the markets this year. Thanks for joining us today.
Thanks so much for having me.
Can we start with what you refer to as the wild card of geopolitics? Do you expect sustained market reaction to some of what has unfolded so far?
Well, I don't know that the market is particularly focused on the things that have happened just recently, but we do think that the purple haze, as I've been describing it, of policy uncertainty, geopolitical tensions, and sort of hotspots around the globe, certainly being a piece of that. I think the market's going to be more focused on it this year than it was last year. But usually markets are only, materially concerned, aka, leading to a market correction of sorts when we start to see energy policy being materially impacted or some sort of disruption to oil production or oil supply. So to the extent we stay away from that edge or that brink, if you were, I think the market can kind of move past some of the geopolitical noise. But I do think that fiscal policy, Fed policy, we have a midterm election cycle here in the U.S. Those things are going to be important drivers for the market in 26.
Okay, let's talk about your outlook, if you don't mind, for the American economy for the year, given the softness in labor and knowing that the Federal Reserve has been very focused on that.
Yeah, we actually think it's going to be a pretty solid 2026. Our expectation for U.S. real GDP growth is to about 2%. I think that's on the lower side. I think there is the potential for an upside surprise and an acceleration. We're going to finish 2025 in a very strong place. Q4 expectations for growth have a 5 handle on them. So if that comes to fruition, it's going to be about 3.5 or close to 3.5% growth for 2025. So I do think that there is some upside to growth. We have a lot of momentum starting off 2026. And some of the fiscal policy actions that were taken over the course of 25, I do think will come home to roost in a positive way to help reaccelerate growth. So we're feeling pretty solid in terms of the backdrop as we start out the new year here and as we kind of see 2026 playing out. It's just that wild card is a lot of policy uncertainty and policy noise.
2025 is, very much an AI-driven market, but then it tapered off at the end of the year, lost some steam. Will it be less of a driver, you think, in 2026?
I think it's still going to be a pretty big driver. It's hard to bet against the AI trade in this environment. I think more what was going on into the end of last year was really a question around valuation multiples, right? A lot of talk about bubbles, frothiness, et cetera. We don't think that we're, faced with a bubble scenario in all things AI, but valuation multiples are pretty extended. And so we're starting off this new year here with pretty extended valuation multiples. It didn't give us much of a reset. So I do think the AI story is going to continue to be important. I think from a market leadership standpoint, it's critically important. But what's interesting about 26 versus 25 is the distinction between earnings growth for the S&P 500 with and without the top 7 or 10 names narrows quite a bit. It's only about 200 basis points difference. So I think that speaks to signs of life in the broader 490 stocks in the S&P 500.
Yeah, some of that still might be AI driven, right? With the play out from AI, specific stocks to the energy sector, that kind of thing. How are you playing that?
Well, so we're very positive on AI and the AI supply chain. So back in the fall, we did tactically lean into greater and more targeted AI exposure through the use of an ETF strategy and also an international exposure. So we do think the AI and technology story does go beyond U.S. or domestic companies. And so we're leaning kind of with a barbell approach between U.S. and and also emerging markets and China more specifically. I think there's a lot of opportunity. We think it's very early innings, maybe 3 or 4 in terms of that inning. And so a lot of runway left. I think the key, you called it out, what happens with power, energy, et cetera, supplying it, data centers too, but there has to be more to it than just the infrastructure build. And so I think the use case story, the new business models for 2026 are going to be really important and interesting in terms of the continuation of the rally.
You refer to the midterm elections, which happen at the end of the year. What is the typical market response to these votes?
The market loves a gridlock scenario. The market would be betting, if we had the midterm elections right now, the market would be betting for change of control, some seats lost in the House, and certainly the House flipping to the Democrats. But I sort of giggle a little bit and joke that, the market likes gridlock because it doesn't really want Washington to do a whole lot. And so when you have divided control, it tends to limit policy surprises in one direction or another. So usually under a divided government scenario, we tend to see the best performing market environments. And, again, we'll see. There's a lot that can happen between now and November, but I think that's the scenario that the market would be happiest about.
There's a lot that can happen considering what a bumpy start to the year we've already had. It's only been a couple of weeks. All right, Amanda Agati, thanks for joining us. Appreciate your time.